Happy Monday, everybody. I hope you had a great weekend. Today is September 19, 2022, and this is your Monday Market Update. Last week was another one for the books, and to a large degree, thank goodness, this one is in the books. Let's recap that, preview the coming week, which includes the Fed meeting. So Monday, stocks gapped higher as the dollar pulled back thanks to hawkish chatter from the ECB. Recall that the dollar should continue to pull back if the Federal Reserve is not perceived as the most hawkish on the block. And going into Monday, following a 75 basis point hike by the ECB the prior week, moderating growth, high inflation, it's fueling the chatter from the ECB, and that brings the dollar down. As that happens, the outlook for the U.S. companies gets better. Recall that I've spoken to you about the impact of the dollar in the 108 plus range, and it will likely be having a negative effect on U.S. companies. Oracle released earnings after the close on Monday, and they blamed the dollar for about 8 cents of negative effect on their earnings. That is 8 cents out of their $1.03 for the quarter. Add to the fuel to the market rise was the news from Ukraine that they have now taken back close to 6,000 square kilometers of territory that had been under Russian control. The hope is that the success of the Ukrainian army will bring Putin closer to ceasefire talks, or will it push him to escalate? The overall market hope is that with the glass is half full. As the dollar moved, so did commodities. Gold, copper, nat gas, and even oil were up on the day. S&P 500 finished the day up 1%, Dow up 0.71%, and the NASDAQ was up over 2%. About face, at least that's what the market did on Tuesday. Tuesday was all about the CPI, and we've been talking about it for weeks. As I told you last week, if you thought labor reports move markets, watch out, the CPI. Despite, the steady move down in prices of gas on the gas pump, the number was still hot. As most of the, as I've noted, food prices and many more of the components that make up for the gas going down, everything else going up. Food index was up 11.4% from a year ago. Make no mistake, as we've been saying, it appears that we've either peaked or close to peak in the headline inflation, but we're still at 8%, and the target is 2%. I've told you that there are many opinions, mine included, that we're going to see a pretty quick fall in inflation as supply chain frees up, and that's happening. We're seeing ocean shipping costs come down, now half of where they were in the beginning of 2022. As of Tuesday, we're still watching the rails. There's a strike possible. That was as of Tuesday. That will not do much for the supply chain. Quick spoiler alert is that was cleared up. For the markets after the CPI report, the previous positive futures turnaround and the previously positive futures turned around. The markets opened down about 2%. But that is when the real selling started. Talk started and odds started to figure in a possible 100 basis point move from next week from the Fed. I remain convinced that we will see 75 basis points, nothing more, that's this week. But like Goldman, the estimates of November and December rates hikes are pretty solid too. Not much change in my opinion. I'm still thinking that the terminal rate in the 3 3/4 to 4 1/4 range by early next year. But as the rate increases have time to make their way through the system, as I've told you, I don't think they'll have to move as far as they are talking about. I think supply will be that mover, and that will bring inflation down more quickly. This all remains to be seen, but as of Tuesday, not showing in the bulk of the data. Overall, by the end of the day, we saw the worst day since June of 2020. In the heart of the pandemic, the Dow down almost 4%, S&P down 4 1/3%, and the NASDAQ down over 5% on the day. Giving back much of what the prior week picked up, as you may expect from the info stream, the dollar, which had dropped about 3% the past few days, surged ahead back towards 110 and almost up 1.5% on the day. That contributed to the risk off, of course. Wednesday came along, and as far as follow through, not so much. PPI was in line. It was pretty much ignored. Overall, the market was in digestion phase. PPI was again in line. Overall, the odds for a year-end Fed funds rate of 4.5% jumped to more than 50%. Headwind on stocks, of course. Is it priced in? All of this remains to be seen. Favorable news for a change out of China for easing of COVID restrictions, as the banks are reducing deposit rates also to encourage some spending. Overall, a slightly positive day by the close. S&P up 1/3 of 1%, Dow up slightly, and the NASDAQ up about 3/4 of 1%. Thursday found a resumption of the selling. I guess one day break was good enough. Strong jobless claims, retail sales that look good on the surface but disappointed under the hood. Add in the World Bank noted the rising odds of a worldwide recession in 2023, as well as more stagflation concerns. As the market prepared for the end of the week and another options expiration, the markets all closed lower. Dow down 0.5%, S&P and NASDAQ down a bit over 1%. Stocks gapped lower on Friday as the market reacted to a dire report from FedEx. Thursday late, they slashed guidance and the CEO warned of a worldwide recession. Didn't we just hear that? While FedEx is on the front line of moving products, they have been a good read on the economy, at least in the direction of the economy. Not necessarily so good about the depth of the move. This did put a sour taste in everyone's mouth going into the weekend. The Dow was down about 0.5%, S&P down 0.75%, the NASDAQ down just under 1%. Overall, that was just one of those weeks that we could do without. Maybe a do-over for the week. The Dow was down 4.13%, S&P down 4.77%, the NASDAQ down 5.48%. There was almost nowhere to hide last week. Every asset class that I'm watching was down on the week, save one. Silver was actually up, although it is still down 16% of the year. What does that mean? Absolutely nothing at this point. The key event this week is, to say the least, is the Fed meeting, another two-day meeting. Recall that last month they did not have a meeting due to the Jackson Hole event and the bombshell that came from that. Wednesday we'll have the report. The key really is not whether it will be 75 basis points or 100 basis points. The forward guidance will be what we're watching, and you can bet the algos will be looking at the nuance of each and every word. What will the terminal rate look like? 4, 4.25, 4.5? That's what's being debated now. The way the market goes will depend not on the decision. Most are still betting on 75 basis points, but what the words look like. Do we think that the Fed is going to keep the foot firmly on the brake, or will they let the economy coast a bit and see if we pick up speed or not? If inflation can start to move down, remember, that's the key target. We'll still get a few stragglers in earnings, Costco, Darden, a few of the homemakers. FedEx will officially announce late in the week. Don't count on any changes from that story, as we just said. Well, we'll also get jobless numbers again on Thursday. Remember, although this is the weekly high-frequency number, it is starting to get more playtime because the labor market is one of the mandates of the Fed, and it is still too hot. 5.5 million people looking for work and 11 million jobs outstanding. Wage inflation is still crazy. We're going to see if that cools off a bit. Overall, we should see the market try to digest the moves from the past week, the past couple of weeks. The boat deck is looking pretty slippery. As we say, the crowd keeps going from side to side. We'll see how that goes. In the coming weeks, watch for earnings estimates to come down, and that's the next shoe to drop, but I believe this is already priced in. So a lot to keep up with this week. Big news on Wednesday with the announcement, but more so on the press conference and the dot plot release. That's the forward look. Come back Friday for another part of the multi-part series on Q4 planning. As these markets bring questions to your minds, if they do, please call or email. Let's talk about it. Have a great week.